Hey, welcome back to Market Sense now here on Point. Let's get into that market picture. And Asian shares stepped back from what is an 8-month high on Thursday as investors took money off the table amid fresh concerns about that US-China trade talk. And of course, dire data coming out of Germany, which signaled that trouble is indeed on the horizon for Europe. Now, Chinese shares did, however, manage to close firmer as analysts pointed to investor fatigue and perhaps a lack of fresh headlines on the Sino-US trade talks for Thursday's sell-off, while disappointing US economic data this week also weighed on sentiment. Now, more than 1% of a gain for the Nikkei, which ended the day at 21,713 points, while the Hang Seng out in Hong Kong was 1.2% to the good, hitting 29,981 points, 3,216 for the Shanghai Composite, that figure up 1.2%. We head on over to the United States now, where stocks edged higher on Wednesday, extending what is a strong start to the quarter as rising hopes of a trade deal with Beijing boosted investor sentiment. The Dow Jones Industrial picked up 0.2% to 26,223 points. That's while the S&P 500 managed to move similarly higher to close at 2,873 points. There, the Nasdaq Composite added 0.6%, closing out at 7,895. Market picture not looking as rosy as things have been over the last few days. So, of course, 3 days of gain is perhaps the status quo for now, but we'll take it. Look, it's only a slight drop for today, 0.2% lower, still above that 57,000 point mark and still ever so close to that mark there of around 58,000 points, of course. So some negativity coming through across the board there when one takes a look at how things are faring on the local front, of course. As you can see, the big counters there going down, those industrials and financials, both industrials and financials, they're going down over 0.3% thus far. So we'll continue to unpack that market picture in just a bit. But let's catch up with more of these numbers and we'll chat to you in a moment. All right, let's get into that market picture now. And we're joined live from the Johannesburg Stock Exchange now. Viv Govender from Rand Swiss joining us as well as we get to unpack that market picture. And we'll hopefully get him up in a second there from that satellite. Of course, the market picture itself, as I said, a little bit dire on that situation. 14 Rand 40 against the US dollars, the current state of South Africa's Rand. Viv, thank you so much for the time. But 0.2% lower today. Perhaps a little bit of momentum sort of petering off as things were slightly positive over the last few days.
Yes, I mean, we weakened quite substantially into basically the Moody's decision last week. So at one point in time, we were like at around 1470. The kind of fall happened when we started load shedding, about a month or so ago. And before load shedding, we were well below 14. And it took a few days after load shedding started to get us above 14. And like I said, 1470 was the high. So we're on the way back down again. I think there's still some fears around the election, but we had a couple exogenous variables as well. We had the Turkey situation, the Turkey election, plus the kind of strange moves that government made to protect its currency, which obviously backfired. And that also affected us quite negatively. So I do think that we're probably a bit undervalued at the moment compared to where we were a few months ago. But that being said, I mean, we're still feeling the after effects of some really important decisions, I believe.
Yeah, look, those decisions are going to be quite crucial to getting things a whole lot more forward. Do you think there's perhaps some sense of sustainability that we can get with the South African currency, headed especially towards the elections that are happening, of course, in May, that is? So it becomes difficult now to ascertain exactly where things really stand. Are we waiting for perhaps a full-on ANC win? Would a coalition government and the like, would that affect things per se with regards to the currency?
Most certainly. I mean, I'm not even sure what the ideal situation for the market would be. Would they want a 75% ANC government, for instance, but that might be land expropriation or compensation, or it might be none of that because maybe the ANC government really doesn't want to do it, and because they had such a huge victory, they might say, okay, we don't need to do this kind of stuff that we really don't want to do. On the other hand, if the government is basically sitting at like 51%, was mean that Cyril Ramaphosa might leave because he didn't bring the victory that he was supposed to bring. If they drop below 50, and who do they match up with? If it's the DA, probably a positive. If it's the EFF, it's probably a negative. So there's a number of combinations out there, and I don't really, I'm not really certain which one the market would view as being the most stable, the most positive for things going forward.
Okay, well, will certainly be interesting on that facet. If you take a look at that British pound figure, 18.58 for now, it even reached 18.70. And my fear very strategically was that it would get to 19 Rand very soon. And that is despite Brexit still not going the way that Brexiteers would have liked. So why is it that it's weakening so much?
Yeah, look, I mean, the Brexit uncertainty is obviously something that we can be concerned about. I think actually the pound would strengthen quite significantly if the Brexiteers didn't get their way. If the Brexiteers basically were sidelined and you had something like, stay effectively in the same thing, soft Brexit, or you had no Brexit, I think if you see those kind of effects, or even basically something as strong as a second referendum or a general election, which is likely to result in a second referendum or basically no Brexit, you would see this pound strengthen quite strongly. So the pound is weaker because of Brexit, and anything that weakens the possibility of Brexit happening is positive for the pound. But at the same time, we still need some certainty. You can't just have uncertainty around everything.
Yeah.
Things that move away from Brexit positive, but uncertainty about everything is a negative for that economy and that currency as well.
Yeah. Quickly on that oil price as well, $70 a barrel against the US dollar at some stage, now retreating back perhaps, sitting as it sits behind you there around $69 odd against for a barrel of Brent crude. Are you worried about that number staying firmly above $70 a barrel?
I think it depends on the kind of interplay between the Saudis, the Russians and the Americans, quite frankly. Traditionally, over the last few years, the American shale industry has been a bit of a cap on oil prices on the way up. Whenever oil prices get very high, we see the shale industry step up production and basically able to supply the market with excess amounts and bring prices down.
Yeah.
But what the Saudis and OPEC to a certain extent have shown is that if the shale industry basically does that, the Saudis will push the price down to below 50, making much of the new production unprofitable. So it increases uncertainty and makes them less likely to just jump up whenever the prices are sitting at about 70. And the resolution that they've shown recently with cutting prices, cutting supply so they get to 70, may indicate that OPEC has once again gotten some control over the oil market. And if that's the case, we could see oil prices staying at 70 or even slightly above that for the near to middle future.
It's quite questionable then that at this point in time, we don't really know where the direction is coming from when it comes to that market picture. What is it exactly that you're looking out for?
A couple of things. Of course, we still want to see what happens with Brexit. I think that'll have a huge impact on a couple of the biggest markets in the world, the UK and, of course, Europe, and will have knock-on effects around the world. The second thing is that we saw the German industrial orders number coming in very weak. That could indicate some real weakness happening in China because of the trade issues with the US. And China, despite its growth and so on, still depends a great deal on US consumption. And I think this is probably the last few years that Donald Trump basically has gotten hit. It's the last few years that the US could actually get in and actually make some real impact on China like it can right now. In, say, 20 years' time, probably the Chinese will be too big to be affected this way they are right now. But it does indicate that the Chinese economy is slowing down. We're seeing the effects in China. We're seeing the effects by the Chinese or those that export to China, like, for instance, the Germans. And that's a key, in fact, I think, also to worry about.
Yeah. All right, Viv, appreciate your time, but always good chatting to you there live for us at the Johannesburg Stock Exchange, of course. We've just mentioned that the currency, of course, and that picture is seemingly one of keen interest. 14 Rand 14 odd against the US dollar, so that mark will be keen to watch out for. Of course, the commodities themselves have hovered at those levels, but look at that, 14 Rand 13 against the US dollar. Perhaps a little bit better thus far today, but it has even hovered a whole lot better, around 14 Rand and 9 cents even yesterday. So we would probably want that to go down a little bit more. As I said, the uncertainty of those elections, and that election picture will be of keen interest. Despite Brexit, the pound just continues to weaken or strengthen, shall I say, with the South African rand weakening against it. And perhaps a lot of those factors are just own goals when it comes to how things are faring on that front. So all of that, and of course how things are going with the DAX and the European markets as well, has been slightly different today. A mixed bag across the board when one takes a look at how things are faring on that front. But that is a look at the markets. Of course, we had just spoken to Viv Govender there from Rand Swiss, and we'll continue to unpack that market picture for you. But for now, that's where the buck stops, and Zinga joins you right after the show.